The particular thing we're looking at here is earnings announcements and the actual value of the earnings, how much earnings per share. And there's two databases that we use, and the target here is trading strategies that use last quarter's fundamental data to enter or exit positions, and the timing of these trades may depend on the next quarter's expected earnings announcement. So we may want to enter immediately after the previous quarter's announcement or filing date and exit just after the next quarter's announcement. So there's two things here. There's an announcement and there's a filing date. We're interested in quarterly reports. So there are two databases that we need to look at and essentially merge for this information. Here's information from the Charada data website. So they've got 20 years of history, and what they are obtaining the data from is 10Q and 10K filings, and the 10K is the annual report, 10Q is the quarterly report. There are also other filings for special events, but we're in particular looking at the quarterly earnings reports. So we have three files related to the Charada data. The first is indicators, and this is basically just a key to the data. It just tells you what, so this column here where it says indicator is going to be, these elements, these items are going to be columns in the main data set, and they have a data of tickers, which gives more information about the actual ticker symbol. Interestingly, there are 35,392 of these tickers. And you can see there's all sorts of interesting examples from different countries. The location, for instance, in this one is Jordan, and here's France. So it's quite a coverage. They have what they call different dimensional views over time, and these are the symbols for them. So quarterly excluding restatements, quarterly including restatements, annual excluding restatements, annual including, and so on. We're just going to be interested in the quarterly excluding restatements because typically there's an announcement, a press conference, some published announcement of the data, and then they will file it with the SEC in the EDGAR database. However, and we'll see this in a moment, so this here is the actual data, and it's what they call their SF1, which is just Charada Fundamental Database number 1. And you can see the sort of information here. The date key is 1, and I don't think we can see, there's quite a bit of information here. There's 111 columns of data here associated with each earnings event. So now we're going to just check a basic integrity of the data, and I'll let you look at this yourself, but basically every column name in the data, the SF1 data set, is in the indicator names, and the same in ticker. They're all indicator names, but there's 116 indicator names that don't appear as a column in either tickers or the data. And it turns out that that's because they have SF2 and SF3 and so on databases that use those other headers. Okay, so there should be only one report for each company, for each quarter, in our case, for each date key. The date key is the actual filing date of the actual filing date of the report. And that's okay, so we don't have any inconsistency there. Now they talk about report period, and from indicators, it represents the end date of the fiscal period. So we're going to restrict, as I said, to just the quarterly ones. And we're looking to derive the fiscal year and quarter from the report period, which, as I say, from its name, it seems the most likely choice, and the calendar date. Oops, what happened there? Did I not run this one? No, I did.
If you have been following Walter's notebook on your own, try it to run the cell to see if you get the same error. Sometimes, like last time, you actually may not get this problem.
Let me just close and hold both of them. I think the accident is just that I opened them twice. So let me reopen this one. And just quickly go down through it. And then we'll run the profile report. Okay, so we've reduced the number of columns to just these here, and we've essentially saying, okay, let's just create something called the quarter, so the year, so 2017 Q1, from the report period, and the other one from the calendar date that they provide. But just remember that date key is the actual date that they filed the report. Looking at the profile here, what we would expect, for example, is that we would expect 4 of these reports for each ticker. All right, date key, they can occur at many, many times. The filings can happen any time. Earnings per share is interesting. The mean earnings per share is minus 44.725. That seems a little bit bizarre. We'll look at that in a moment. The quarter reporting periods, well, these ones seem okay, but there are 9 values. So there are obviously reports coming even back as far as 2015. The report period, a large number of those. The tickers, of course, is exactly what we expect. So let's just go back up to have a look at this mean here. It does seem odd that the mean is that bad, right? So let's just have a look at SHA.EPS, and we'll just choose some arbitrary number here and see how many of those there are. So there's only 42 that are less than 100 minus 100, 13 less than minus 10,000. Well, let's just look at that value. So some stock has earnings per share of minus 853,260. Obviously, we're not going to be terribly interested in that one. Who knows if it's
right? That's also an issue of if these earnings per share have been split adjusted, right, or are they point in time earnings per share? Do you remember which one it is, Roger?
It should be point in time, but
yeah, that would make it more suspect. That if these huge numbers is a result of being split adjusted, that's just like the prices, that could be reasonable. But if it is a point in time earnings, that seems more likely to be wrong.
Right. Okay, so we haven't affected anything here much by making that change. Okay, so wait a minute. I wanted to look at, where's the ticker? Yeah, let's look at the ticker details. So we would expect normally there to be 4 of these per ticker, but you've got some that are 7. So they've filed quarterly reports 7 times, some 6, and so on. Well, we'll examine that a bit further later, but there's already something a little bit strange here. Let's have a look at one of these. So what appears to be happening? The report period is 2016, 04, 03, 07. So if you look here, that there's basically a filing for the March quarter of 2016, then one for the June quarter, then one for the September quarter. Then we've got the December quarter. And so these ones look more normal here. But so it apparently is restatements. So that's going to be something we'll have to deal with. But at the moment, we're just looking at, I've put explanations from their indicators to these sort of things. But we'll see we'll deal with some of these problems.
Oh, I think there's a question.
The other database.
I also want to make a comment that it is important to make sure you don't assume that just because there is a 10Q or 10K filing, it is necessarily a filing on the fiscal quarter that just finishes recently. As Roger said, there are the issues of restatement. Sometimes when the company restate their earnings for many, many past quarters, they will file a whole bunch at a time. And so on that particular filing date, those filings are for quarters that are long past, not the ones that are just recently finished. So when you do this data analysis, do not assume that.
But Lionel does say that we did attempt to choose those without restatement.
That's not the intent of ARQ, right? Because when you filter by ARQ, you are filtering those numbers that were point in time. So by point in time, it doesn't mean that it means that they have not been changed since it was filed. But you will see the same number repeated if it is restated. You understand what I'm saying, right? So by selecting ARQ, it means that on a particular row, that is the number filed on a certain date, and it was not revised or restated in the future. But if that quarter result was indeed restated in the future, there will be another row appearing referring to the same fiscal quarter, and it is also an ARQ item because that is the restated item, but it is it was just as reported. So there are two as reported items referring to the same fiscal quarter. Oh, there's a follow-up question. The true exclude is to only keep the first one. Yes, if you want to use it for back testing, that is correct. When you back test based on the earnings, you should only use the first as reported, because the second as reported might be several years later. You cannot really trade that number which refer to the fiscal quarter many years past.
Okay, so the charade data, the date key, the primary information is the time that the filing was made with the SEC. But that has little to do with when the company actually announced the results. Sometimes it's the same day, sometimes it's not. So but of course what we want is the announcement date, because that's when the action takes place. That's when the movement takes place and the effect is really felt. And as you said, it will be on we believe, the first filed value of the EPS after that. We'll see that that's not always the case necessarily. And so we use the Wall Street Horizon database, which gives us information about upcoming announcements. So it's kind of interesting. It's considered a very high quality database, but basically it only has entries each day for announcements that haven't been made. So you have to detect when the announcement was actually made by its absence in the next time you look at the database. And this is the data, and here's an example. This is for Apple. And this is the quarterly earnings here. The timestamp is just when we got it. So basically what we do with this data is we download it every day. I'm saying that we download it at 5:30 a.m. every day. And so this is what the data looks like, the XML file. And so it's this particular entry is for an announcement for the Q1 period. And this is the date on which it happens. And these others are the dates for other announcements, the other quarters. So you can see that there's all four quarters are represented here. But this particular data, this particular chunk of data, is for the Q1. So what we do, right, as I say, download it. It can be downloaded anytime during the day. If you pay a premium, you can get it updating as they get new data. And what we do each day is we extract just the relevant information for each stock. So we get a CSV file that has lines with that data. So it's showing the company. Here is the actual date that we downloaded that on the left here. And there's the year, and this is the upcoming announcement date, and this is the quarter for which it happened. So it's basically just extracted the information that we want. And this is the tail of the data, so it's going through the end of 2017. We just, as a sample of data.
Roger, let me give some information about the vendor also, in case people are interested in purchasing the WSH. So the live daily feed that we have been showing here, as Roger said, we subscribe to the live feed and we capture the daily numbers at 5:30 a.m. Eastern Time. And that feed is extraordinarily cheap. You can subscribe it for $20 a month for MyB. So, better hurry up. Who knows if they're going to be around for a long time, because it's extraordinarily cheap to get that data. $20 a month if you subscribe through Interactive Brokers. However, as Roger said, the premium feed that update is expected filing throughout the day, that's about $1,000 a month directly from Wall Street Horizon. But also, how are you going to backtest this data if you don't have the historical data, right? So, of course, what we do is that we will capture the daily live feed into our database, and then we will be able to use it for backtesting in the future. But suppose you just start subscribing tomorrow, how are you going to backtest the strategy in the last 10 years? Well, in that case, you do have to go to Wall Street Horizon and purchase the historical data directly from them. And I don't know how much that is going to cost. So that's the information about our vendor. And by the way, as per the data evaluation agreement, your email have been sent to Wall Street Horizon, so they may contact you for sales pitch. Just be prepared. All right, back to you.
Okay, so the issue is we can get EPS from the Schrader data, and we can derive the actual announcement date. So the EPS is on the filing date, which is different quite often from the announcement date. And as I say here, we expect it to be the announcement to be earlier. The first thing is we need to restrict to tickers that occur in both data sets, obviously. So we want to align the WISH and the Schrader data sets so that we can, basically, we want to identify the Schrader filing date to get the EPS for each of the WISH announcements that we derive from the announcement that we get from the daily data. So this is the code, and let me just, actually, I'll just run this cell, and then we'll run this cell, these two down here, and then discuss what's going on here. So again, to restate what's going on here, whether you get the historical data or you capture it yourself daily or at higher frequency, basically each day you get an upcoming announcement for every stock that is going to make an earnings announcement. So there is a significant number of these, and I believe that we saw up here that there's the date of the upcoming announcement, and there is a time of day associated with each one, and it's after market, before market, or during the market. So what we do is, what we're looking for is the day that a particular announcement date disappears from the data for each stock. And that's basically what this code here is doing. And so it's doing time of day, after market, before market, and during market. And those are the three cases. And now it takes about 3 or 4 minutes for this to be processed. And so we would expect to see just a few announcements around the edges of the announcement or earnings season, and then many more right in the middle of it. Oh, I should say that we're creating two times here for each stock where it disappears, an in date and an out date, namely the day that it was last in the report, and then the first day that it's out of the report. It would be convenient, of course, if Schrader had the true announcement date for each filing, and actually associated.
Actually, a very interesting point, Roger.
I'm not sure that anyone's.
Yeah. So to clarify, what Schrader provided is the date of the 10Q and 10K filing. Those are the dates where the company submit a formal report to the SEC and probably instantly available via the sec.gov website. But typically, simultaneously or prior to this formal filing event, the company will issue a press release. And that press release is what is commonly known as the earning announcement. And the earning announcement is what the Wall Street Horizon captures. The Wall Street Horizon does not capture the 10Q or 10K filing date, but they capture this news release. The news release is an abbreviated announcement. It doesn't capture the entire financial statement. It typically reports some highlights, like the bottom line number, which is the earnings, and maybe some top line number like the revenue. Just a few numbers. But that is usually what moves the stock price immediately, right? That's the earning announcement. So the Schrader does not capture the news release date because Schrader is focused on the complete financial statement filing. Whereas WSH focuses only on the news release, which is a abbreviated capture of the financial results.
Okay, so let's just look at a particular ticker, Apple. So this is what we expected. We expected 4 announcements, and you can see that well, the in and the out, they're always just one day apart. And of course, the in date is always going to be the file date, so we can just get rid of the file date now. And as I said, we want to restrict to the stocks that are in both databases. Remember, what we're doing here is, before with the Kaggle competition, we were merging, or our target was to merge price data, market data, with fundamental data. Here we're trying to merge 2 fundamental data sets because we need data from both of them. So the in dates and out dates don't mean much. The quarters should be just Q1 through Q4. But here's someone has a Q4 2016, 7 of those, then a full year 2017, which belies the ARQ statement, and then here's a Q1 2017. Somewhat bizarre. Now, here are the counts for each ticker. We would expect only 4 of these for every stock, as we saw for Apple. And we've got a bunch of these. So we'll have to work out why that's the case. The 3 strange quarter-looking values that I mentioned there, we'll just have a look at the stocks that have those. Why we're getting a full announcement, we don't know, but we'll just get rid of that. And fiscal year 27 and Q1 for the JCI here definitely seems redundant. So we would want to fix that. Let's have a look at what SIG has. This is the one that has the full year 2017. We'll just get rid of that one. So now what we're doing is we're comparing the Wall Street data with the Schrader data. And let's just have a glance at what's going on here. So the date key for this first one is, oh, by the way, remember I said that we were trying to just derive a quarter from one of these, either the report period or the calendar date, to be matching what we're getting from the Wall Street Journal or Wall Street Horizon data. So, are we seeing what we expect? So for this March ending quarter, the announcement appears to have happened on the 9th of March, and the filing was on the 16th of March. And that same pattern is happening here and here and in each case. So this is the expected behavior. But this is why we need to work with both data sets. The SEC filings tend to lag the dates in which companies actually announce their earnings results. So we'll run the profile report again to see if we've fixed any of the multiple occurrences. And so we want to look for the tickers. Let me raise this a little bit. Oh, sorry. Oh, wait a minute. What we're looking at here, sorry, is, sorry about this. Okay, we're actually looking at the Schrader one now, because we've gotten rid of the ones that don't occur in both. And I wanted to look at what's happening with ticker. And we still have a number of them that have multiple filings, right? And we've seen that in the Wall Street Horizon, there are quite a few with multiple announcements. So what is going on? We'll look at the top of this list here with Schrader and I'll get those both on the screen. So this is Schrader data on the top, and this is Wall Street Horizon data on the bottom. So we seem to be having the same thing that we saw before, that there appear to be restatements. It gives us 5 actual announcements, which again is a little strange. And there's actually another anomaly here that I'll address down a little bit further. So basically, this one here appears to be from, what does this say? It's fiscal year 2016. Maybe they were late with the announcement. I'm not sure. Well, it seems like they've submitted a number of past reports in quick succession, and again, it's probably restatement of earnings. Well, let's look at Apple in two cases, try and see if there's something normal here. In this case, here are the filing dates, and they all match the announcement dates. So that's one of the behaviors we just like to see, either announcement dates in fact, they can be possibly on the end date, depending on just exactly when they file that report. But what I wanted to point out here is that we're trying to match the quarter or derive the fiscal year and quarter from the Schrader data, either from the calendar date or the report period, but we're not getting a match here, even though we clearly have identified matching filings with matching announcements. And so let's look at this. So the first one, we've got 2017 Q1. This is 2016 Q4. Well, that's what Schrader, we derive from Schrader. Here we've got 2017 Q2. So this one's right for report period and wrong for calendar date. This one here is right for report period, but it's repeated here. So neither one of these two here will work for the merge. So we're going to have to give that idea up. So now we'll check a number of the other companies. Now this is where we found a bug in our own code, the code that extracts the data from the XML for the Wall Street Horizon. And here's the problem, right? It's saying that this first announcement is for 27 Q4, and in fact it should be for 2016 Q4. The charade is correct. So in fact, if you recall the XML, there was a date for each of the quarters. And the problem is that you can have in that list announcements that have already happened or announcements that are upcoming. That is, the data itself for the actual quarter that they're announcing is correct in the sense of having that is the upcoming one, but they actually have some older ones and newer ones in the list of other quarters. So there's actually an easy way to fix this. We can just simply look where the Q1 is and change the years before that to the prior year. So let's just do that. So now Amazon is doing the right thing. Okay, we're going to look at another ticker, another example. And here is the case where Schrader looks relatively well behaved, but ADXS, the Wall Street Horizon, has a bunch of announcements. So why would there be multiple announcements? Well, actually, remember that these are upcoming announcements. And of course, this is great, right? Because this is what you want when you're actually using this stuff. You want to know when they're coming up. You don't want to know after the fact when they actually happened. So it's an important point about this database. But let's have a look at this one here. So on 2017-105, we found that this Q4 2016 Q4 announcement disappeared. So that's why we're assigning it an announcement date of this. But then on the 9th, it apparently reappears. And on the 9th, it disappears on the 10th. And so, wait a minute. Are there two announcements or are there not? Same thing here. So we've got, actually, how many of them? We've got 3 of them, right? For that, actually, no, there's 4 for that quarter. 1, 2, 3, 4. And now we've got 3 for this one. Well, what actually happens, since they're only giving you the upcoming ones, what's actually happening is that they've announced an upcoming announcement date, and then they change it. And in this case, they're delaying it, and it's delayed repeatedly. So it appears to be multiple, but it's just the delaying of the announcements. And it is said, and we'll see that that's pretty reasonable, that often predicts bad news.
Actually, that's a very interesting point. This delay by the company of the announcement has been used in a trading strategy that I actually wrote about on my blog. Roger, if you don't mind bringing up my blog and search for Wall Street Horizon, you will see that article.
Okay, so I'm doing the search offline, and here it is.
Yes, that's it. That's it. It's everybody's familiar with the post-earning announcement strategy where you trade the momentum of an earning announcement, but this is about a pre-earning announcement strategy that you can only do if you have Wall Street Horizon data. Now, just after we backtested this strategy, okay, as described in the blog, we actually implemented paper trading on it, but it never generated the returns that we've seen in backtest. So so take this backtest with a grain of thought. That it doesn't mean that our backtest is wrong, but it does mean that there may be a certain amount of data snooping going on because we were not able to actually trade it profitably. Nevertheless, it's an interesting illustration of the information contained in the amount of delay that the company engaged in when.
All right, so we actually check a few more companies here, comparing both of them. Netflix has 4 filings and only 3 announcements. Exactly why that is, it may be that the announcement occurred in the prior year, and you need to take some of this with a grain of salt because I've just taken the year 2017 data again because of data restrictions for giving this stuff out. Microsoft looks pretty normal, as expected. Hewlett-Packard, however, is another kind of issue that we see. So a nice progression of announcements, but let's look at this last one here. the announcement was on 27/11/22. They have a filing on 12/14, and then another filing on 12/15. By the way, I should say that back here with when we were discussing these multiple dates, then of course we want to take the last announcement, right? So that's what we did here with that case. I missed that point. Not the first one. So with Hewlett-Packard, choosing the first one here or the last one doesn't make any difference because the actual earnings per share is the same, which is the thing that we were targeting in the merge. Okay, so there are only four earnings announcements in 2017 as expected, but 5 quarterly report filings, 2 at the end of the year. There's a question is, the earnings per share was the same for both of those, but are there tickers with multiple filings in the same report period that have different EPS values? We'll just go on down to so this isolates the ones that do have 2. And you can see here for CLDR, it's a huge difference. This one's relatively small. This one's relatively small. This one's relatively small. And here's another big difference. Okay, I'm going to just leave this now because we need to go on to some other things. But basically, you can see that for good reason, there are all sorts of special cases here. And merging these two data sets is actually highly non-trivial. All right, so I will leave the rest as an exercise, meaning how do you merge these two? Some cases are very clear, as we saw with Apple, when the filing date and the announcement date were exactly the same. You'll see a bunch that have the filing date one day before, and those are essentially clearly matched. Okay, so let me go.
Right. So I think that the reason we want to merge these two data sets from the fundamental data set to the WSH expected earning announcement data set is if we plan to enter a trade just before the announcement, right? Because if we are intending to enter a trade after the earning announcement or even after the SEC filing, there is no need to use the WSH announcement date because WSH only allows us to know ahead of time when we should expect an announcement. But if you are going to enter after the fact, there's no need for this expected. You just wait until the company actually make an announcement and then enter a trade, right? So that's I should be clear that that's the purpose of the merging. So with that in mind, clearly, if you want to merge these two data sets, the principle is that if you have a expected announcement date, you just want to look for the role of the data in the charade data set that is the most recent prior to that expected announcement date. Because in live trading, that's what you're going to use. That is the fundamental data from the last quarter, of course, not from the expected announced quarter, but from the last quarter that you're going to base your prediction of the next quarter numbers on. So